Nagi Shi'i Kodo Tony Scrolanas Shia. This is the Lunch and Learn under the Navajo Nation President's Office, President Nigrin and Vice President Rochelle Montoya. We're talking to you from the Division of Economic Development. Today we have a presentation on financial literacy. Before we get started, this is something that we initiated to really educate the public. We've spent a lot of time as a Division of Economic Development really redoing our website. If you have some internet aptitude, check out navajoeconomy.org. We're spending a lot of time and effort to really make our information user-friendly and to reach folks that really haven't been reached before in terms of entrepreneurship, business startup, financing, business planning, even just to get inspired and get ideas. I want to thank a couple of folks, obviously the president's staff, our staff, Daisha, Holian, and others. Also, I want to thank, today we have a partnership I'm really happy with, and really I think we're supporting each other in a lot of different things, is the NAD Development Corporation. There are major technology business. They have companies all over the country doing really major business for the Navajo Nation, and it's really the professionalism, the growth of this company is very dynamic, and so they're sponsoring today's presenter. Financial literacy is a really important topic. It's really comes to the base of being an entrepreneur, but being a responsible person. If you have, if you're a young adult, or even if you're an older adult, I think we all have money management issues. We all have financial literacy needs. No matter, sometimes you'll be on a good road. Sometimes you encounter issues. There are certain types of, even when you're a disciplined person, I think we all run into this. It even starts as a sheep herder, being a sheep herder, being living in the land, being a weaver, being a silversmith, whatever. We all need this kind of coaching, this kind of roadmap. I think the more we listen to these kinds of information, this is something that really can help us as we navigate this world, as we navigate our sheep herd, as we navigate our business. So I really want to thank everybody for pulling this together. And I want to introduce our speaker today, Chantay Moore, she's the owner of this company that she does personal finance. And I was asking her, what's kind of inspiring her, and she sees the real need for financial literacy education for our tribal peoples, And I think all over the country, I mean, even my family, even my parents, my aunts and stuff, we all need this, the yego and the haoto, that even as individuals, as professionals, we all need this kind of information. So she came all the way from Chicago to be here with us. She is the net Chicagoan. She has a bachelor's in accounting from Roosevelt University, and then she has a master's in business administration from Grand Canyon University. With that, I'll turn the time over, and we have a live audience here too. We want this to be interactive. We want people to be asking questions. This is something that we're really taking this up a notch. We really want to have this kind of interaction and do more programs like this. We expect a lot more. We're doing next month, I think, on tourism, and then other subjects. Give us ideas to maybe one on business site leasing, maybe some on the SSBCI financing, So, but again, look to our website, and with that, I'll turn the time over to Chantay. Yeah.
Thank you, Director. Appreciate it. Good afternoon, everyone. Thank you so much. I appreciate the director's introduction and everyone who sponsored me, especially the NED Development Corporation, for bringing me back home all the way from Chicago. I was born in Shiprock in New Mexico, but I grew up in Chicago. There's a lot of Navajo families in major urban cities and across the country. So I'm just super blessed to not only have the expertise that I have, but to come home and to share with my own folks, my own people. So today's topic already had a wonderful introduction, but one thing that I'm very proud of is that I was introduced to the financial services industry straight out of college. And I was given the opportunity to learn about personal finance and investing and wealth management and all these big terms 20 years ago. And I've been doing, in this career for that long. And one thing that I've noticed in my career is that a lot of these big name investment companies and investment firms that we hear of, we see the commercials, they don't come to our communities to help people like us. Being Danette and African American, no one's coming into any of my communities here or even in Chicago. And that's why I created my company. It's called Native American Financial Literacy Services. I established it back in 2019 to specifically support tribal nations and organizations all across the country. And again, I'm just so happy that the Net Development Corporation is sponsoring me for this event today. At the end of the day, I like to pride myself on making topics of personal finance easy to understand. Because what I also found in my career was that when folks talk about money, it's too complicated. It's very high level, it's over our heads, and people walk away not doing anything. So I partnered with an amazing financial literacy company called How Money Works, and I've used their platform in my own experience and knowledge to create presentations and to educate anyone. I appreciate the director's comments. Anyone, we all need to learn about money. From birth all the way to the end of life, we all need to continually learn about different aspects of personal finance. So I'll be sharing for about 30, 40 minutes. Feel free to ask any questions throughout the presentation, and any online, I'll be happy to address those. But I hope that you walk away at least feeling not only more educated, but more empowered to actually take action. Because it's one thing to learn and not do anything, but I feel like when you actually learn and you take action, that's where the rubber meets the road. And I hope I can give you some practical steps on what to do after you learn the information here. So, quick disclaimer, everything that I'll be sharing today is strictly for educational purposes. Although I am a financial professional by profession, I'm not here to give any specific advice. I'll be happy to connect with folks one-on-one at the end of the presentation if you want my contact information. But I don't want you taking my information and saying, Chantay told me to do this. It's strictly for education purposes. And because I do work in a very highly regulated industry, it's also an industry full of a lot of laws and regulations. Some information, especially if you're watching the recording later, could change. There's constant changes in our legislation when it comes to investing and taxes and accounting and things of that nature. So just be mindful of that. And if I do tell a story or if I give example, those are just hypothetical. Okay, I'm not making any guarantees or anything. And most importantly, I put together information that I feel most would apply to most families in their situations and even entrepreneurs and business owners. But I won't go into very, little details on everything. So why is it important for us to have these conversations? Because for one, I think it's super important for people to feel that they need, and they need to understand that they should have conversations about money. I know, especially in a lot of our native cultures, we don't talk about money. It's taboo. It's, you don't need to know what I make and don't worry about my business. But I truly believe, just like with the formal education, an investment in knowledge pays the best interest. And you need to become educated about how money works. And the reason why is because financial illiteracy is the #1 economic crisis in the world. This isn't just a tribal nations, communities issue. This isn't an African American issue. This is people all around the world are economically challenged. They don't know how money works. And when we think about the term financial literacy, let's define that. If you just think of the word literacy, it just means you have competence or knowledge in a specified area. Financial literacy means you have an understanding around money. You have an understanding of how to earn money, spend it, save it, manage it, and invest it. That's according to the Federal Reserve Bank of St. Louis. So when we think about navigating this world, we interact with money every single day. It's not just about being wealthy or having a lot of money or being rich. We interact and make financial decisions every single day as a member of your family or as an entrepreneur, as a business owner. And some statistics that I want to talk about is again, why is it important? 44% of Americans can't cover a $400 emergency. And I think we saw that during the pandemic, right? More than anything, people were financially struggling because they just didn't have the extra funds available. Over $9,300 is the average credit card debt that a household will maintain, that they carry, meaning they're not paying off that debt. And if you're not paying off that debt, we know that interest is building over time. And if you don't pay off that $9,300, you will be paying over $37,000 in interest over a 30-year period. This last statistic is most concerning for me. 33% of American adults have zero retirement savings. None whatsoever. And I found that for me, like, I don't want that to be my mom, my aunts, my uncles who can't stop working. Retirement is when you get to an age and a point in life where you live a want to kind of life, not a have to kind of life. And I think a lot of folks, they think retirement is, oh, now I'm 62 or I'm age 65, I can just stop working. And that's often not the case. Especially in our tribal families, we see a lot of folks who can't retire and they're depending on their family members and other relatives. And we do that culturally. But I think if we can put things in place now, even if you feel you have little financial resources, we can avoid becoming a part of that last statistic there.
Question.
Yes.
On that last one, does that include like 401ks and retirement?
Yes. Yeah. So
that's a lot. 33% of Americans don't have that.
They have little to no savings.
No IRAs, no 401ks, no
nothing.
Oh my gosh.
Yeah. If you think about it, a lot of folks are working part-time jobs, so they don't even have access to a 401k because they're not a full-time employee. So if their employer, and most people, if they are saving for retirement, is through their employer. So if you have a part-time job, you don't have access to a 401k, and you don't know anywhere else to save, they're just simply not saving. They're not saving at all. So that for me, that's why it's very scary, because a lot of folks are not doing anything about it, and they don't know how. And this speaks to that. We also know that no generation is saving enough. When we think about retirement, I tell folks, think about it like you're flying an airplane. We want 2 wings on that airplane working just fine, right? Retirement, what we know is that as older generations, they used to have pensions. You could really depend on your job to take care of you in retirement. Now, you only typically have Social Security to rely on. And if you don't know, that's always in trouble. If you actually look at your Social Security statement, there's a little asterisk on the bottom of your statement that says the Social Security Trust Fund only has enough funds to continue paying in the amount that they're paying benefits out until the year 2034. That's 10 years from now. And if they're not able to continue paying, what do you think will happen? They'll reduce the benefit, or they'll either increase the retirement age. And they've already increased the retirement age. So that's very scary to only rely on Social Security. And we know a lot of our relatives, that's all they live off of. And it's hard. It's not an easy lifestyle. And then if someone does have a 401k, the average 60 to 69-year-old American has less than $200,000 saved. And so what we realize is that we have to be responsible for our own personal savings. And that's the other side of the airplane wing, where a lot of people just aren't doing it. And as you can see on the bottom corner, it says how much in retirement savings on average is each generation doing. Millennials barely have over $23,000 saved. That's my generation. I'm an older age millennial. Gen Xers, we call that the sandwich generation. You're taking care of aging parents and you have adult children that you're taking care of. She's like, yeah, that's me. You too. They have about $66,000 average saved. And then the average baby boomer, when they retire, a little over $150,000. And if you think about your income right now, all of your expenses, is that enough? Will Social Security be enough? Will Social Security even be there? Think about our younger. I think about my children, their generation X, Alpha, and Beta. And I'm like, they're definitely not depending on Social Security. So it's scary. It's a real reality of why we need to have these type of events and presentations. And then I always tell people, do not feel bad that we don't know this, because guess what? We don't learn about it in school either. There's only 28 out of 50 states that actually require high school students to take a personal finance class to graduate. And that class, it's very basic. It's like how to write a check, how to balance a checkbook, things that we don't even use anymore. Like when I do applications, they don't even have checks. We don't even deal with those things anymore. So if we don't learn about it in school, where else are we going to learn about money? Typically, you would learn from your family, your relatives, mom and dad. But if you grew up poor like me, mom and dad did not have any money. I love them with all their hearts, but they didn't know about money. If you don't come from money, your family doesn't learn about it. How are you going to learn about it and then pass it on to future generations? So again, it's important that we take on that personal responsibility to have the education and to learn. So before I move on, I talked about all the bad stuff, right? It's like, oh, it sucks, Chantay. I know, I get it. But let's talk about financial concepts that for me transform my life and my way of thinking. And then let's talk about solutions. What can we do to actually get out of and get into a better financial situation? So I want to go over 3 quick concepts. The first one is called the power of compound interest. Has anyone ever heard the term, I want my money to work for me? We hear that, right? This compound interest is how you make your money work for you. And what this basically refers to is leveraging the power of interest, growing your money while you're sleeping. You set your money aside in some type of savings account, it's earning an interest rate, and it compounds, which means every time that interest pays, it grows on top of each other. That's compound interest, based on the deposits that you continue to make. So Albert Einstein called compound interest the greatest mathematical discovery all time. He actually identified it as the 8th wonder of the world, because he said if people understood the power of compound interest, they would be so much further ahead financially. And this is just an example. I'm sorry, the numbers are really small on the screen, but it just shows an example of someone who's saving money from age 25 all the way to age 67, as you can see on the bottom of the screen. And it's showing them saving $178 every month. The only difference is the different interest rate that they're earning. So for example, if someone is saving $178 a month, I don't know why that number is what it is. It's a weird eyeball number. But imagine saving $178 and you are doing it in an account earning 1% interest. After 42 years, that money would have only grown to $111,000. As you can see, the higher the interest rate, the more your money grows. 3%, it's $179,000. At 6%, it's over $400,000. Oh my goodness, what if you were earning 9% compounding? This is compounding interest over a 40-year period. That person, that young 25-year-old will be a millionaire by the time they retire. So again, these are hypothetical, but the moral of the story is where you save your money and the interest rate that you earn, it matters. Why would you save your money at 1% when you know that you could probably be getting it higher or should be seeking higher interest rates? And that's why it's important to work with financial professionals and learn about where else can I put my money. And we'll talk about a little bit about that in a couple of slides as well. But, this for me, I want to earn the 9% or more because, the higher the rate, obviously, the quicker my money will actually grow. The second concept I always talk to folks about is called the time value of money. Now, wouldn't you agree, we live in a world of instant gratification? Like, I want my Uber here in 2 minutes. I want my DoorDash food delivered to me in 5 minutes. And if people apply that instant gratification idea to their finances, they think, let me put my money aside and I expect it to double or triple overnight. And that's not how wealth grows. It actually takes time. And there's 3 steps to be mindful of time. One, the first step is just to start now, just to get started. When I'm doing my presentations, I'll have a lot of individuals, they're older, they're maybe 50s and their 60s, and they raise their hand and like, Chantay, but I'm already old, I can't even do anything. No, you can still do something. You can still leverage the time you have. Imagine your teenager learning about these things. Imagine your young adult child learning this information. They have more time and they can grow wealth. So I always tell folks, just get started. Sometimes we think that we have to live in this perfect world. Well, Chantay, let me pay off my debt first. Let me send my kids off to college first. Let me do X, Y, Z, and then I'll start saving. I'll tell you right now, there's never no perfect time in life. Just get started. There's always going to be an emergency. There's always going to be something that can interfere with you growing your money. So just get started. The second concept, or the second principle of the time value of money, is just to save regularly. It's kind of like when you're going to the gym and you're working out and you're building the muscle. Wouldn't you agree that as long as you keep going, you'll get stronger, you'll do it better, you'll continue building muscle? Same thing when it comes to our finances. Even if you start putting away $5 a week or a month, $10, whatever extra money you have, do it consistently. And then you'll build that muscle of saving money to where you don't even think about it. It's not a chore. It's not hard. And then the other part about that is when your income does increase over time, when you start making more money, you already have the concept of, you know what, I'm already saving this money. Let me just save more. Because what I find is that a lot of people make more money and they end up spending that extra money instead of saving it. Trust me, I know a lot of folks who are multiple income earners, 6 figures, and they're still broke. They're still living paycheck to paycheck. So it's not about how much money you make, it's about how much money you keep. And we want folks to just get in the habit of saving regularly. And then the last part of that is be patient. Like I mentioned, it takes time to grow money. You saw my example as a 40-year example. Don't think that it's hard because in the beginning you might not see the growth right away, but over time, if you look at my other chart, you saw that growth happen on the back end. It doesn't happen right away. It really happens on the back end. So just be patient with your finances. Now this slide, it always hits people in the heart here, because a lot of people also don't think about leveraging time. I always tell people your 2 greatest assets are your ability to earn an income and your ability to leverage the time in your life. Imagine if you wanted to be a millionaire, save $1 million by age 67. And I want to say, I get it, that's a big number. And a lot of people probably like, I will never be that. You never know. But I just want to show you an example of what does it take. What does it take? If you're earning 9% compounding interest that we talked about, just pick your age on the screen. I'll tell you mine. I just turned 40 this year. If as a 40-year-old woman, I wanted to save for 27 years, I would have to save $731 a month to reach that $1 million goal. But what we're back. Okay, back to the last.
Yes.
Last talk. Okay. All right. Sorry about that, you all. So the last financial concept that I'll talk about, and then I'll talk about some practical steps, is called the Rule of 72. Now, I'll tell you, my background, as the director had mentioned in my introduction, is that I have an undergrad degree in accounting and a finance degree for my MBA. And I'll tell you, this financial concept I never learned in any of my business schooling at all. You would think accounting and finance you will learn, never learned it. So I just wanted to preface with that. So what the Rule of 72 is that it's a mental math shortcut. If you are saving your money and you want to figure out how long will it take my money to double if I keep it in that particular savings account, for example, you use the Rule of 72. You take 72 divided by the interest rate, and then that will tell you how many years for your money to double. So if you have 72 divided by 1, that means your money, if you're earning 1% that we talked about, that means your money, if you kept it earning that 1%, that it will double in 72 years. So let's look at this a little further. Now, like we talked about earlier, the higher the interest rate that you earn, the quicker your money will double. So for example, if we were earning that 9% that I was talking about as an example, 72 divided by 9 means that your money would double every 8 years. What if you earn 12% interest? Your money will then double every 6 years. So pretty significant, right? But where do most folks actually have their money? You can just answer out.
Savings account.
A savings account. What is your average bank savings account probably earning? I'll tell you. 0.15%. Right now it's a little higher. I'll give you that because interest rates are high. You could probably get 4 or 5% interest. But on average, and those rates won't stay that high at all. Trust me, they will come back down. But prior to what we've been experiencing with high inflation and high interest rates the last few years, most people would have their money sitting in a savings account earning 0.15% or less. A lot of banks were giving 0.09, 0.01. But let's say you were generous, they were generous enough to give you 0.15%. That means your money sitting in that savings account would take 480 years to double. Now, why would someone do that if they understood the Rule of 72? You wouldn't do that naturally if we understood that. Because your $1 will become $2 in the year 2504. I mean, we won't even be here. Let's think about this also. The Rule of 72, as I'm describing it so far, is in the way of you saving money. Where else do we interact with interest? With debts. When you have credit cards, when you have loans. The average credit card interest rate is 22.44%, which means that if you have a debt and you're not paying it off or paying it down, and you have this average rate, 72 divided by 22.44 means that credit card debt or loan that you have, that debt will double every 3.2 years. Now that, when I learned that, I was like, oh my God, I gotta pay out everything. I was like, I can't do that. And let's think about it. Who issues credit cards? What companies? The banks. So let's think about this. So that if I go to a bank and I try to save money, they pay me 0.15% interest. But if I borrow money, they charge me over 20%, 30%. The banks are not stupid. They're not dumb at all. They understand the Rule of 72. And this is how our people get taken advantage of because we just don't even know a basic concept like that. And if you don't walk away with anything, remember the Rule of 72. Because like I said, hopefully it'll change your way of thinking about money like it did mine. Once I fully understand, wow, I need to take advantage. I want interest working for me, not against me. Now that we've learned a couple financial concepts, and just like the director mentioned, now what do? We all should have a roadmap when it comes to improving our finances. And our company, the company I partnered with, the How Money Works company, they came up with these 7 money milestones. And basically what these 7 money milestones are different areas of your personal finances that you should take a look at and address it. Have a conversation about it. Look and see, do I have these 7 areas together? I tell folks, a lot of times we say, do better with your money, but we don't know what to do. This is your roadmap. This is your guide to becoming financially secure and independent. And I want to go through each each money milestone really quickly, so that you can get an idea of what does that encompass. And again, is this something that I need to address as a business owner or for my family? So that first milestone is financial education, becoming financially literate. And that's why I'm so thankful to the Department of Economic Development for, he said, we're really trying to amp up these presentations. We want to teach. It's so important to become financially literate. Our company, we use a book called How Many Words Stop Being a Sucker. And we use that as part of in addition to our courses, to help people learn about money. And I have one for everyone here. This is a book that you can read to just understand. It goes more in detail about the financial concepts. But I always tell people, have you heard the saying, you want to keep a secret, put it in a book? It's so true, because a lot of people aren't reading. So read that book, you'll get educated. But the second part that I feel that is very important is to work with a financial professional. Why do we think that we can fix our money on our own? Like, we go to professionals for everything else in our life. If you're sick, you go to a doctor. If you're trying to lose weight, you go to a personal trainer or a dietitian. If you need some legal help, you go to a lawyer. Why not engage a financial professional to help you with your finances? So I think it's super important to, if you don't know financial professionals, because trust me, like I said, no one's coming to the res trying to help us. I could definitely be a resource to you or point you to someone local to help you make decisions about your money and your future, to really sit down with you, talk to you about your goals, and to say, hey, what do we need to do? These are the things that you can implement. So milestone number 2 is proper protection. And when you hear me say the word protection, I'm actually talking about all things insurance. Life insurance, health insurance, disability insurance. Sometimes people, the insurance industry gets this bad rep of, I don't know why, like you feel like people are trying to take advantage of you. But insurance, whether it's for your home, your car, or for yourself, is to protect the what ifs in life. What if my house caught on fire? What if I was in a car accident? What if I'm no longer here? How is my family going to move forward? So we really talk about life insurance. And again, one thing I know is it's taboo to talk about death. We don't like to talk about end of life or anything happening to us, but it's a reality. It will happen. Yes.
We have an individual from the live asking, can they get a copy of the book?
Yes, I'll go back to the live and I'll post a comment on how to access the book. We actually have an ebook that folks can download. So for the ones who came in person, I have a physical book, then we have an ebook for everyone else.
Thank you.
So with life insurance, one thing I found is that a lot of people, again, they don't want to have a conversation, or they think it costs too much. And life insurance is pretty inexpensive. You want to work with an agent who understands your budget, who could really understand, like, okay, what do we need to cover if you're no longer here? A lot of people who underestimate how much they need, meaning if you do have life insurance, you probably don't have enough. They also tend to overestimate how much it will cost. And again, I apologize to folks who might be offended, but it's a real conversation. I wouldn't be sitting here doing my job if I didn't talk about life insurance. How many people in my own family have passed away and we're selling dinner plates? We're doing GoFundMe on social media. And I'm not here to downplay anyone who's had to do that, because that's a reality. Some folks have had to. But if you could have put away just a few dollars a month to get proper coverage in place, and then your family gets thousands of dollars in a benefit, why wouldn't you? Me being a single mother, I have 3 children. If something happened to me, my children need to maintain the same lifestyle. I don't want them to lose the house that they grew up in. I don't want them to have to go live with relatives because I'm gone, I'm the breadwinner, and they're no longer here. So I have to have the conversation. And honestly, it's one of the first things you should do when it comes to your finances. Because some people will tell me, well, Chantay, let me just put money in a savings account, and I don't want to deal with that life insurance thing. Great. But if you passed away, how much money is really in your savings account? And will that be enough to really take care of your family? So I want us to be honest and real about something that we do need. Now that I've harped on the need for life insurance, how much do you need? If you're earning an income for your family, we estimate that you should have applied and qualified for at least 10 times your annual family income in life insurance protection. So for example, if you make $50,000 a year in income, you should have $500,000 in life insurance coverage. If you make $100,000 a year, you should have $1 million in coverage. Now that's just a basic estimate on how to determine how much you need. So again, when people have life insurance, they might have just a few $1,000s. At least hopefully you have something to cover final expenses, but I want you to start thinking about leaving a legacy to your family. Instead of passing on debt from generation to generation, let's pass on wealth. And life insurance is one of the easiest ways to do that. And I want to just educate folks too so that you don't get taken advantage of. There's only two types of life insurance. There's temporary and permanent life insurance. Temporary is also known as term life insurance, and that means it just lasts for 10, 20, 30 years. You're literally paying for life insurance for a period of time. I really like term insurance because it's the most inexpensive. So like if you have a huge insurable need, but you have a really small budget, apply for term insurance. It's very inexpensive. But obviously you know that it's only for that period of time. But then when you have a stable cash flow, then you might want to look into permanent life insurance. Most insurance companies nowadays will offer coverage through age 120 because a lot of people are living longer, right? Like we're living well past age 100. So permanent insurance, it does cost more, but it does also have a lot of benefits built in, like benefits for long-term care, if you become critically or chronically ill. It also can accumulate cash inside the policy. There's different types of policies that will do that. But then you can also leverage those living benefits, and it's not just for if I pass away. Yes.
That's pretty much the same as like an IUL account, correct?
Yes, an IUL, which is an Index Universal Life, is one type of permanent life insurance. I really like IULs. And I always tell folks, if you are able to, afford like that cash value life insurance, what can it do for you? It's actually a really nice feature built into those type of policies because you can pull that money out for anything, and it's tax-free. So for example, for myself, I'm an entrepreneur, I'm a business owner. I don't have a 401k account yet because I don't have employees, but I use permanent life insurance to grow cash inside of this life insurance policy so that when I retire, that money will be there for me to use in the future for my own retirement needs, and I don't pay taxes. For my children, I actually have permanent life insurance for them as well, so that as they become older, they can have that money used for college, they can use it for getting their first home, whatever they want. So again, that's not for everybody, but you want to talk to a knowledgeable insurance agent who can help you make that decision on what type of protections that you should obtain. Long-term care insurance, again, is also another benefit. Because a lot of folks are living longer, 70% of Americans over age 65 will need some type of long-term care. And that's not just going to a nursing home. If you can't perform 2 of the 6 daily living activities, which are eating, getting out of bed, getting dressed, going to the bathroom, like moving, you can't do 2 of those 6 things, you qualify for long-term care. And so with life insurance, you can actually often add long-term care as a benefit to your plan. So again, that in itself is a whole 1-hour presentation. But life insurance we have to get it out of our mind of it's just for if I pass away. That's not the case. Term and permanent insurance makes sense for a lot of folks, and I believe every person, even our children, should have some coverage on ourselves. All right, let me get through these last few slides quickly. Milestone number 3 is having an emergency fund. I think we hear that all the time. You should have 3 to 6 months of your income saved in an emergency fund. And I do agree with that. And it's hard to get that amount of money. Again, just get started, set some aside, you'll get there. Again, the main thing is, I always tell people to think about if you lose your job. It typically takes about 3 to 6 months to find a good equal paying job again. You don't want to have your bills suffer where you can't maintain your finances. Milestone number 4 is about debt management. So we talked about the rule of 72, so now we understand we have to pay down our debt. I would just tell folks, let's just eliminate our debt and try to stay out of debt. Sometimes what I see when I'm helping folks with their finances, they have no idea how much debt they have. They don't even know what they owe, which is one of the tips that we encourage folks to just understand. What do we have? Open up that big old pile of mail, pull out those statements, look at the interest rate. What are your minimum payments? When do you need to pay that money back? Let's stop making late payments. Again, the banks, the credit card companies, they know that we're, putting our head in the sand. Let's be more empowered to be on top of our debt so that we can get out of debt. Also, go to the annualcreditreport.com website. This is where you can pull your credit reports from the 3 credit bureaus, TransUnion, Equifax, and Experian. I think because of COVID, you can actually go once a week to pull your credit report. A lot of people tell me, Chantay, I'm trying to build my credit. I want to buy a house. Well, I'm not a credit fixer. You need to go understand what's on your credit reports, and if there's anything inaccurate, dispute that information right away. Milestone number 5 is all about increasing cash flow, and I think this Department of Economic Development is all about entrepreneurship, supporting small businesses, and I truly believe that as well. I think we live in a world where one income is not enough. We need to have other things to do on the side, and as Navajo people, we do a lot of things on the side, whether you're an artisan or he mentioned sheep herders, or there's things that we can do to bring extra income into our family. Having a side gig, starting a business, or even if you are an employee, adjust your W-2 allowances. That means that you don't have as much taxes coming out of your paycheck. So you're not getting a big tax return at the end of the year. You're having more of your money come into your paycheck. And take advantage of the Department of Economic Development's resources, because there's a great loan that's about to come out. Guess what? I'm applying for that loan. There's an artisan, a small business owner grant. Take advantage of those things. Don't sit on the sidelines and say there aren't resources to help me. There are resources to help you not only start a business, but to even help you with access to capital. Milestone number 6 is about building wealth. So this is kind of the fun side of money. This is where we get into investing and growing our money and really getting into having money for retirement. This question here, will your wealth last as long as you do? This is the biggest concern that a lot of people are having right now. 63% of people have a greater fear of running out of money in retirement than actually passing away. We are living long lives. Because we're living much longer lives, obviously due to medical advances, the statistics say that you can expect to be retired for the same amount of years as you were working. So if you are working for 30 years, you can expect to be retired for 30 years as well. And the question is, do I have enough money to take care of me coming in to last me that 30-year or longer time frame in retirement? So what we do is we work with folks to help them understand, how do we build wealth? 1, stop procrastinating. Let's get to it. We know we have to make a sacrifice. Understand, if you're investing in the stock market, understand how to avoid losses. I highly encourage you, if you're really trying to get into the stock market, work with a licensed financial professional. We can help you with those things. Inflation was huge. We know inflation made everything cost more. We have to factor that in. And taxes. We're all related here, not just Navajos, but because we have Uncle Sam as our uncle. And Uncle Sam, the IRS, the Internal Revenue Service, every single dollar you save, they want a piece of it. So we need to understand, all right, do I want to be taxed on the seed or the harvest? So if the seed is just my small deposits, or the harvest, when my money really grows into a large amount. And there's 3 ways that you can be taxed, 3 different types of accounts you can put your money in. A taxable account, which means every year you're taxed. We call it tax now. You pay interest on your earnings or dividends. You pay taxes on that every single year. Your tax later account, those are pretty much any of your retirement accounts, anything at the job, any IRAs, individual retirement accounts, those will fall into those categories. While that money is growing and investing, you're not paying taxes, but when you pull it out later in retirement, when you need it the most, that's when you pay your taxes. But then there's so many places where you can save money where you don't get taxed at all. We call those tax advantage accounts. So long as you follow the rules, your earnings and your distributions are not taxed. So again, having that education, in our book and our resources, we teach you about what type of accounts fall into these different categories, so you're more educated on where am I putting my money, how much interest rate am I earning. You now have more education to know what to look for. We also talk about how to have a reliable retirement income. Because at the end of the day, if you're getting ready to retire, the one thing you don't want to happen is for the market to take a turn and now you've lost half of your retirement account, like a lot of people, like it happened to them in 2008, 2020. We want to help you understand where can you put your money where it can still grow. We reduce or remove the potential for it to lose money, and we can turn on an income stream for the rest of your life. So these are financial concepts that we want folks to be educated and to know there are options out there for you. All right, milestone number 7, and I'll be wrapping up in a moment. This talks about, all right, we went through a lot today, right? A lot of steps, a lot of practical, let's do this, let's do that. It makes no sense to make all these good financial decisions and not protect your money and not make sure that it's set up to where it passes on to our children, our beneficiaries. And that's what milestone number 7 is protecting your wealth. Now, we believe that you should have what's called an estate plan. An estate plan is a group of legal documents that you have in place that tells folks what to do with your money when you can't do it for yourself when you're here, but also if you pass away, who can handle my money? I'm pretty sure if I asked, has anyone saw somebody pass away that didn't have a will, but they owned property, they had sheep, they had jewelry, they had a business, and nothing was in place, everyone has experienced that type of situation. We believe you should at least have a will. This is a written document and it's based on your resident state laws, but it just identifies who can be named as the executor of my estate. That person would be responsible for like closing your bank accounts, making sure, your car gets sold or your assets get transferred on to your children, whatever that is. Making sure your money and everything is properly distributed according to your wishes. You should also have a financial power of attorney, especially for a lot of our seniors. I don't suggest becoming a joint account owner with our parents or our seniors. Just have a financial power of attorney. This gives someone the authorization to manage your financial affairs, like paying your bills, paying your taxes, when you're not able to do that yourself. Advanced healthcare directives and living will. This is regarding your healthcare decisions. I had an aunt a couple of years ago. She was in her mid-40s, had a massive stroke, and was on life support. And the doctors were asking us, what do we do? Do we pull the plug? Do we not? And again, these are very sensitive topics, but it happens. If my aunt had a healthcare directive or a living will, we would have known what to do in that, terrible time of my family's lifetime. Unfortunately, she passed away on her own the next day, but how many times have we been in that situation? And families are fighting because they're like, no, mom wants this. No, mom wants that. Let's get these things in writing so the family, there's no fighting. Whatever that paper says is what the doctors will do. And then the HIPAA authorization, this allows someone to have access to your medical records, your insurance information, who can assist you. And then if you might have more assets or maybe you have a home, a business, this is actually where then you would actually want to establish a trust. So trusts are super important because all of that, like that will, that's a public document. That can become public record. A trust is best utilized for folks who want complete privacy and protection of all their assets. So if you have a trust, it's again another legal document that you're establishing where now this legal document will say, how your property is distributed, is protected. It'll name all the interests to your children. You can put your home in trust, your business, your car, you can have investment accounts, bank accounts, and anything that trust owns is completely private. No one needs to know about it unless you decide to tell someone. And it also makes sure that after you're no longer here, your assets can continue growing or pass on to whoever you want. So trusts are really important, especially if you have properties like across states, if you own real estate, if you have a couple more significant assets, you probably might want to establish a trust. And for me, it's important, find estate planning attorney. Like, don't go to just any attorney. You want them to be specifically experts in estate planning to put these documents together. If you're interested in the will, power of attorney, I actually have a free resource that you all can use that will do these documents for you. All right, so the last thing I just want to talk about is probate. So if you do nothing, what happens especially if you have assets, then a judge in the state of New Mexico or state of Arizona determines what happens to your money, or it takes just a long time to pass on to your beneficiaries. Like I said, I'm from Illinois. I don't want nobody, the state of Illinois is horrible figuring out a budget. I don't want them even doing nothing, making no decisions about my money. So we do these documents, we have these things in place to avoid probate. We don't want the government getting involved with our financial affairs. All right, the last thing I just want to share is the importance of seeking professional guidance. Again, like I mentioned, I think it's super important to have someone walk you through these steps, whether you use myself, I'm happy to be a resource to anyone here, or another trusted professional. You just want someone who will sit down with you, understand your financial goals, and look at your personal situation. Just because your coworker is doing X, Y, Z doesn't mean that makes sense for you. Or because your boss is doing this investment in the stock market, that doesn't mean that it'll work for you. I think it's super important for folks to have your own situation looked at and a professional develop a plan. Also, we give you access to the best financial products. The number one question always people come to me is, where can I get that 9%, that 12%? Well, you need to come to me because you'll likely have a hard time to find that on your own. When you work with a financial advisor, a professional, we give you access to those financial products that can give you those guarantees and the higher rates of return. And then lastly, a qualified professional really just has the expertise to help you maintain that path. You know, I always tell folks, like, you know, I've been doing this for 20 years. I've seen down markets, I've seen crashes, I've seen recessions, and I've helped my clients through all those things. Try not to, leverage that expertise with professionals who've been through the ups and downs of the economy and the markets, who can help you stay on path for your financial goals. And then lastly, for anyone who wants to connect with me, and then I'll bring Asensio, I want to be a resource. I'm licensed in New Mexico and Arizona, so feel free to use me if you want to connect with me on Zoom. I do free consultations because one thing I found was that, again, I want to be accessible to our Native communities, especially our Navajo people. It doesn't hurt to just have a conversation and say, what do I need help with? So you can schedule that with me at bit.ly/talk to Chantay. I send out a newsletter where I share financial tips, resources. When I'm hosting Zoom webinars, they're always, are free events. I send it out to my email list. If you want to get invited to those things, email me at chantay.moore@howmoneyworks.com, and then connect with me on social media, Facebook, Instagram. I also have a YouTube channel where I do presentations like this on different topics, and I record those presentations as well. So you can learn more information. So that's all I have. I want to, question on the Zoom?
Yeah. So we have 2 questions, and then I'll repeat it to you, then if you could repeat it to the camera and answer. One person indicated, will this be recorded? And the last question indicates, will the PowerPoint be shared? Thanks so much.
Yes, it's being recorded, and yes, I'm happy to share my slides. The question was, will it be recorded and will the presentation be shared? I'm happy to share my slides so you all can have that. Any other questions? Yes.
How do you feel about apps, app type investments like Acorns or Robinhood or Stash or anything like that?
Yeah, so the question was, how do I feel about apps that do investments like Acorn, Stash? I think they are good for novice investors, but one thing I found is they can be costly. So like right now I have a client I'm working with that has an Acorn account, and she's paying like $10 a month and making like $1 every 60 days. They're robo-advisors, so they're not no one who's looking at your situation individually. They're just kind of saying, oh, how old are you with your risk tolerance? And they're putting you into some predefined investments. I think that's a good way to get started, but if you're really wanting to like have a goal that you want to reach or a certain level of growth that you want on your money, then definitely work with a securities licensed professional to help you with your investments. All right, I'm going to step aside and I want to pass it over to the NED Development Corporation for the great people who sponsor me to come in. So hopefully I'll pass it to you. Thank you.
Awesome. Thank you, Chantay. That was an amazing presentation. I think a lot of people can benefit from it. Asensio Tom, that's just probanch, no, it's not just and we just wanted to express our gratitude to President Nygren and Vice President Montoya, Navajo DED and its staff for allowing us to bring Chantay out to share some financial literacy information. It was a great presentation. I think we learned a lot. It was a lot to condense into 1 hour, but we did it. And just from DDC standpoint, we were created in 2004 to serve as an economic development tool for the Navajo Nation to generate revenue from industries that we weren't participating in. But today's information is crucial as a lot of organizations are now requiring corporations, allowing individuals who wish to work for those organizations to be financially strong. DDC is one of those organizations. We have individuals who have security clearances. In order to obtain a security clearance, you need to have good credit, you need to have a good financial history. So for those of you high school students, college students, those who have high school students, college students, this is a great reminder to be mindful of how you and your kids spend their money. It definitely will be beneficial in the long run. So I just want to close that out with that statement. Thank you all for having us. We appreciate the time that you took. Have a great day, and back at it.
Awesome. Good job. Thank you, everyone. I have the book